What's up, everybody? Hope you're having a good start to your month. The markets, however, are not having a great start to the month. The first couple days of this month have just been pretty volatile and a huge pullback Sunday, followed by a pretty big bounce into Monday, and then another big or fairly large dump off into Tuesday. Now we're kind of ranging here between 96 and 102K. I don't know that we're gonna break the lows. It's just a feeling I have that I think 91.4 is probably close to the bottom. Maybe we take another stab a little bit lower. I don't know. We'll see. We'll see what's in store. But yeah, I'm thinking. Hopefully, maybe it's a little bit of hope here. Hopefully we start seeing a bit of recovery. Strategies have been doing okay. I think in this video I'm gonna cover a couple ideas on trading more so than looking over strategies. We will look over a couple of the strategies just real fast to see how they've been doing, but a lot of strategies have been mostly going sideways. Even I'll jump over here for a minute. Even this like Solana 15-minute strategy over here. Over a couple months, or not a couple months, over a couple weeks had some pretty big drawdowns and then a huge run up, followed by some pretty big pullbacks again. We're testing the almost kind of like the previous high before this breakout in the chart, and hopefully it holds. We'll see. Again, I just think altcoins and Solana kind of have had their day for a while. I mean, not all altcoins, but most. Solana, even after Trump released his meme coin, it just got so much hype into Solana, and then I think people just get disillusioned because most people that get in the market around the time are exit liquidity for those that have been in the market for a while. And so these are the kind of things that you start to see around the top of a cycle. I don't know that we're at the top right now, but I am definitely a little bit more cautious than I ever have been before. And again, this month I sold another 5-10% of my holdings across the board on stocks and crypto. So I'm about 30% out of the market now, maybe a little bit less than that, but yeah, I'm definitely wanting to take gains off the table and be able to reinvest them when the market has some big pullbacks. And so these are the times to trade cautiously, in my opinion, and kind of wait for some really good buy areas and really good areas to really scale into some strategies. So I don't know. We'll see. We'll see what the market has. Definitely could have some more upside. And these strategies have been continuing to trade okay. You can see this is Solana 30-minute strategy. The month is down, but it's had some huge pullbacks, and we're only down 0.13% over the month. Probably actually touch different than that, but that's the general idea. You can see like it's kind of been chopping sideways though, because if you've started trading the strategy anytime in the last few weeks or so, you've probably experienced some big pullbacks and then just now starting to recover. If like some of us or me, you've been trading it for a long time, you're well into the green, but these pullbacks hurt, and especially if you're trading at leverage, they definitely are much bigger than they seem to be. So speaking of that, let's look at a couple strategies and ways that I'm thinking about trading and changing my trading style a little bit. I'm still working on my own plan for this, but this might help spark some interest or some not interest, but some ideas for you when trading and thinking about how to trade the market. And again, usually the best time to start trading is after the market's had some major pullbacks. This is none of this is financial advice, and you kind of have to make your own well-informed decisions. But right now, we are just so much further on in the cycle. And if I was a new trader, personally, I would definitely not be throwing all my eggs in the basket right now. I'd be scaling in a little bit if you want to have some exposure, and then kind of just sitting and watching, seeing what happens, and waiting for some major pullbacks. I mean, even in the Solana chart here, you can see there are plenty of times where there are big pullbacks, and so far all of them are followed by some major runs to the upside. This recent Drawdown is no different. And if it was me, I would have scaled in after a few losses, and the losses usually happen pretty fast. You can see it's just majorly, maybe let's see, 7, 8, 9, like 4 or 5 losses in a row, almost there. If you would have scaled in here, you would have had a little bit, of an upside, and then again some more losses. And again, if you would have scaled in a little bit more here, you kind of would be in a pretty good situation, as opposed to maybe you just, and a lot of people start really scaling into trading when the market is at its top, because that's when there's the most hype around it, as opposed to when there's some major pullbacks, and or waiting until you really find that you are settled into the middle of the bear market. And usually the middle of the bear is what I've seen, a decent place to start scaling into long-term strategies and just letting them ride. But anyway, enough on that. I'm going to get into, we looked at the 15-minute, the 30-minute Solana. This is the 30-minute Bitcoin. Looks like it just entered a trade currently. We'll see what this does. This is not looking like a super strong trade right now. But I'm letting all my strategies trade. I find that sometimes my intuition is correct, sometimes it's not, and it ends up at the best breaking even. So if I was right now to get out of this trade because my bot just took this trade, it looks like not a great place to be getting in, and very well could not be. But the problem is, if you start doing that too often, you're going to get yourself out of winning trades as much as you do losing trades, especially if your percent profitable is 65% and you start trying to get in and out of trades. Like, you're already messing with 65% win rate, which is not even 50-50. So that means you're going to be taking away from more winning trades than you would be losing trades, if that makes sense. So yeah, just something to think about. All right, jump into a couple different thoughts on trading and how to trade strategies. The first thing I want to talk about is commission. It's something that's very important to think about accurately, because if you don't, you're going to be a little bit disillusioned by the real results. So for example, if your commission rate is 0.4%, personally what I do is I add 50% more commission than my actual commission is, because you're going to have trades that don't execute quite at the same place they would. They don't, or there's a funding fee that you have to pay, and there's just so many little things that eat into the profits of a strategy. And so if you don't accurately think about your commission rate, you're definitely going to have worse results than you think. So for this strategy, it's initial capital of 10K, order size of 27K, which means you're trading at 3 leverage, about at 2.7 leverage, which means you're leveraging your initial capital up to 27. And so that is also another way to look at the drawdown and really get a better and more realistic example of what your drawdown might be. Now, currently, this is just from 2024, from 10/01 to 2025 today. And you can see the max drawdown is 11%, which is not bad at all. This is the 1-hour strategy. If you're in the quantum wave bands, this is one of the strategies that's trading there. And it's been doing pretty well recently, kind of a slow, steady grind to the upside. But say you have 0.6 commission, then I would put in 50% more, so 0.9 commission, kind of take a look at what it affects, or how it affects the strategy. And the max drawdown goes up a little bit, net profit goes down a little bit, but still profitable. Average trade is still great. If you take it off of that deep back tester, we're going to look at the full results over the last 4 or 5 years, since 2020, so 5 years, or 4, I guess just 4 years. 5 full years right now. But yeah, the max drawdown now is actually way worse. And if you would have started trading at a bad time here, then you would have experienced some really bad drawdowns. I can kind of put this up here so you can see. This is the end of the bull run in whatever that was, 2021, 22 area. And just some major pullbacks. So this is when the major drawdown happen, and 60% drawdown is just nasty. So if you had started trading this anywhere in the last few weeks or a couple months of the bull run, you would have had some really nasty pullbacks. And so it's real important not to be trading at high leverage and not have any cushion in your account when the market seems a little bit over hyped. And so, yeah, again, this is just kind of a thought. I personally just don't start trading full leverage, full capital right off the bat, and this is why. So, something to think about. Another way to think about trading and look at trading. So, this is if you were trading, your at two, basically three, let's say three leverage over this full last 5-year period. Obviously, very, very profitable, but you would have had to get through these massive drawdowns. And that's one way to kind of think about trading, is just looking at the leverage, looking at the drawdown, and thinking, about, are you actually really willing to take these losses? The other way to do it is to look at trading by percent of equity. Now, I don't like doing this, especially when building strategies, because it's really hard to get any helpful information looking at this. I do, however, think it's actually a very helpful way to trade personally for myself. Again, not financial advice, because what this ends up doing is it will, as you hit more and more losing trades in a row, your initial capital will go down, and so your order size will naturally go down. So say you're trading 10K leveraged at, it's the same kind of leverage, you're 2.7x leverage, which means you're trading 27K initially. If your initial capital has drawdown or losses, then all of a sudden your order size will also draw down, because it's always going off your initial capital size. And the chart's not going to be super representative of that unless you can always have 10K in your account. But say your account goes down to like 92K, then all of a sudden, your next few trades are going to be less leveraged, and you're going to have less drawdown. And so as drawdown happens, it actually, more and more drawdown happens. So say you're in a bear market, it actually decreases the amount of capital that you're trading. So the reason I like this is because I can always add more initial capital to the account. Say I start out, just trading a small amount, really small amount, say it's like 3K or 5K, let's say 5K. Start off trading that size of an account, and then I see it has some drawdown, and so then I wait until it has 3, 4, 5 losses, some pretty big losses in a row, and I put some more in the account. I can still kind of leverage up my account a little bit, but it does give you a little bit more protection against having big drawdown. You have to really have a good plan, though, if you're thinking about trading in percent of equity. And the other reason I like this is because you can start really compounding gains when gains do start happening. And the same thing with gains, though. What I do is, as soon as my account gets whatever my goal is, or close to it, or maybe I'll have several layers where I want my account to gain 20%, and then I take out 10% of that, and if it gains another 30 or 40%, then I take out 20% of that. I kind of have these tiers and these goals, and so then I can start to slowly take money out of the account, but the money that's left in the account will start to compound. And this is, again, not going to be realistic results at all, because unless you started trading, in 2020 and never took money out of the account, you're not going to see results like this. It's just very unrealistic. And you can even look at the list of trades and see, you start to just see massive, massive losses as the capital goes off, and the amount of capital goes up, and it just starts to get really, really volatile. Now, yeah, it makes the recent history of Bitcoin look absolutely just crazy, because the gains so far outweigh the buy and hold gains. However, again, this is just not realistic as far as trading goes, in my opinion, because this means you're never taking gains out of the account. Now, hey, maybe you wait until the account is up 100%, and then you take your first investment out of the account, and then you just let it trade. Sure, that's a way to do it. I've not gotten super far. I've probably been trading this way for about 5 or 6 months with only a couple accounts. But it has let me just really take some nice gains out of the account and let the rest just compound. However, again, you can see max drawdown is high. Now, we can actually compare here. This is the difference, though. Max drawdown is actually worse when the gains are actually way less. And that's because, again, once drawdowns start to happen, the capital in the account goes down, and so it starts trading less. So again, this is a little bit another reason for kind of trading with percent of equity. You just have to completely ignore the net profit. I don't think that's ever realistic to think that you're gonna gain 11,000% over the course of a few years. I just think that's absolutely ridiculous, and the strategy probably will start going south before that happens. There's just a lot of reasons I wouldn't do that. Anyway, but that is actually a very interesting way to think about trading. And again, like, make sure you're putting in your realistic commission. Don't ever, in my opinion, I don't make choices based off any chart that looks like this. But I will, start to look at sections of the time, like I just was doing a minute ago. Say, look at a 3 or 6 month period, and maybe look at, let's do this whole year. And then you can kind of start to see how the compounding growth works. And the thing about the compounding growth is it just takes a long time to start getting off the ground. Let's compare this right here for 2024. And I think this non-percent based account will outweigh the percentage based. Let's see. Yeah, by a lot. So it's almost double. No, not quite double, but it's quite a bit more. So this percentage-based account, again, drawdown is better, but net profit is lower, and it just takes a good long period of great trades happening for this to really compound and do well. So anyway, that's something to think about. Let's look at like a 30-minute. So this is the 30-minute VMP with the BBWP strategy that's posted on the Discord. This is for the last full year, basically, and this is we're looking at just the 2.7 X or 27K account size versus the 270. And you can see this account is actually, the net profit's quite a bit lower. Like less than half. But the drawdown is way, way better. And you can see that is obviously a great way to minimize your drawdown. Maybe you want to look at the last 2 years. Again, this is a 2-year period, so you have to really put into perspective trading for 2 years. There's a lot of people here as a part of, that are part of the Bumper Bands Discord that are only been here 5 or 6 months, or maybe just a couple months, and we're just talking years. And over those years, you're going to experience months with huge drawdowns in them. But it's been pretty good. Now let's start looking at even here, the drawdown is quite a bit better, but the account size is still way less. And that's one reason is because the amount of trades is quite a bit less. So percent of trading by percent of equity, if you're having a lot of total trades, it tends to compound a lot faster, clearly. Let's just take it off of that and look at the last full 3 years. And even the last full 3 years, max drawdown is 31, but the net profit is 300%. So you're at, the drawdown is kind of like 10% of your net profit. Looking at this, your drawdown is actually worse compared to your net profit, but it's way better overall. So you only experience half of the drawdown that you experienced in that account. So just another way to think about trading. At this point, again, you either have an account that's trading the exact same amount every time, and you can be taking money off the table that way, or you have a account that's trading in a percentage base, and you can let it compound. Maybe figure out your way to take it off the table. And but yeah, I would just recommend, if you are trading strategies, look at a lot of different scenarios, go to a lot of different clips of time. So maybe even you look at just like 2021 through 2022 or 3 or whatever. Just start looking at different year periods of time, comparatively seeing what the differences are if you trade percent of equity versus not, and also with your leverage and your account size accurate to what it'd be. Let's see what I'm doing 2022 here. So let's take a look at that real fast. You can see 2021 to 2022. The market was super choppy. This kept up with the market though, and didn't have nearly as bad of drawdowns as the market. So pretty good overall. This one did even better. So it looks like on the VMP strategy specifically, trading by percent of equity actually does not give you a whole lot better results. Drawdown is over time better, but you can see these years drawdown was exactly the same and the net profit was half. So I probably would not trade the VMP. That lets me know I shouldn't trade the VMP strategy based on percent of equity. It's better just to let it trade and take the gains off the table. All right, I'm gonna stop right there, and I'm gonna call it a night. But hope you guys are staying safe, and let me know if you have any questions in the Discord. I know it's been quite a while since I posted a video. I'm gonna try to post one every couple weeks at the longest, but there just are times that I get really busy. Currently, I've been working on building a bunch of different indicators and working on a bunch of different strategies types and time frames and all this stuff. So going to be fun. I have a few things that I'm going to slowly start releasing over the next few months. And yeah, just trying to get better at creating better strategies, keeping myself and other people safe out there. And hope you guys have a great one. We'll keep going, and we'll see you in the next video.